So the importance of thinking differently about your money, how you utilize it, the purpose of the money, really boils down to your mindset. The financial services industry for a long time has attempted to get people to think about their money in a certain way. We refer to it as the status quo. Whether you look at financial institutions, the government, Federal Reserve, the media, they want you thinking that the typical approach to solving your financial concerns would be using asset classes like stocks, bonds, cash, mutual funds, those types of asset classes that have been around for a while. But in reality, we believe at E3, the best thing to do is understand you can actually incorporate other asset classes and not so much get yourself to think outside the box, but realize a bigger box exists.
The reason that I decided to join E3 was really because of their mindset, and it came down to a way to offer a broader spectrum of solutions to clients searching for something different. They're traditionally used to what everyone else is doing around them, and in my opinion, being guided in one direction, where we believe that there's alternative strategies that can add more value to their portfolio and financial picture.
An example of thinking differently would be, first off, when you think about your money and you think about how you're going to invest it. Most financial professionals are going to look at it as a portfolio, right? And how that portfolio is diversified from an asset class perspective. What we look at E3 isn't just the portfolio itself, it's actually how you're going to use that money. What's the purpose of that money? So when you start thinking about the diversification of your assets, you don't look at them in just a linear, one-sided approach. It's going to be multifaceted. You might have 2 or 3 different ways that you're going to diversify your money, and it's all based on how you plan on using it.
So everyone's familiar with Yale and Harvard, Stanford, these major institutions and endowments. And what they have traditionally done is found a way to outperform the traditional stock market with a different way of investing. And that's through private real estate, private debt, and private equity, and reducing their exposure to traditional stocks or bonds, which the majority of retail clients today are invested in. How I would explain the endowment model compared to traditional types of investment portfolios would be the inclusion of alternative investment strategies such as private real estate, private debt, and private equity that traditionally have only been accessible through the institutional or ultra high net worth channels and have been unavailable to the mainstream retail clients.
The term thinking differently for us at E3 actually revolves around all areas that deal with your money. So take the concept we have of utilization. The typical financial professional is really going to focus on helping you accumulate money, building your net worth, growing your assets, getting a certain rate of return on your money. But in reality, everyone that accumulates money does it for a purpose. Most people don't think about that purpose before they start accumulating their money. So what we subscribe to is more of a utilization philosophy or strategy, where you're simultaneously accumulating money and also using or distributing it and using it at the same time. By thinking that way, you actually will change the way in which you diversify your money, how you will use it from a cash flow perspective, how income taxes come into play. And when you have all of those different factors really focused in your utilization strategies, you can optimize your overall financial picture. You can look at ways to take control of both your personal and or your business economy.
My passion lies with the endowment model mainly because it's different. It offers unique strategies to clients that traditionally they've been unable to access. And for me, developing a relationship with my clients, providing unique solutions is what can help set me and E3 apart from the traditional mainstream financial advisor.
One thing we'll have clients or other advisors ask us a lot when we talk about our alternative asset class mindset or our thinking differently mindset is, well, do you think stocks and bonds are those bad? Should I not have any money in the bank? And we always want to let people understand is there's no such thing as a good or a bad investment or a good or bad financial vehicle. It's only is it appropriate for your situation. And in a lot of our clients' cases, it's definitely appropriate for them to have a portion of their money in, say, stocks or mutual funds or in bonds or other fixed income strategies. But in a lot of cases, that's maybe all they have. We're just saying, look at what you have available to you, get educated on those. And once you understand and are confident that these other strategies are a fit for you, then you'll start to implement other alternative asset classes that complement the traditional or typical stock, bond, cash portfolio.
The reason I decided to join E3 was really, it came down to their purpose, process, and philosophy, and the way that they thought differently about finance and money-related decisions. And what I was looking for was a way to expand my knowledge base and take it out to a broader stream of clients, more of the mainstream, meet millennials that maybe wouldn't be reached through those traditional channels, and be able to provide them with unique solutions and opportunities that aren't being talked about, aren't really discussed, and they're just unfamiliar with.